Good morning, everyone. So we'll start with the global market update. Most Asia-Pacific markets rebound after sell-off as investors assess Tokyo CPI await US inflation data. The US Labor Department said second quarter GDP rose 2.8% on an annual basis, compared with Econoday estimates for 1.9%. A second reading with more data is scheduled for August 29th, 2024. Orders for durable goods fell sharply by 6.6% in June after rising 0.1% in May. Economists had expected a small gain of 0.3%. Initial unemployment claims for the week ended July 20th fell to 235,000 from the prior week's estimate of 245,000. That came in below views of 238,000. The data comes ahead of the Federal Reserve's meeting next week, when traders expect rates to remain unchanged. A first cut is expected in September, according to CME FedWatch tool. Gold hits over 2-week low as investors book profit. US data in focus. Oil edges up on strong US GDP data, but the Asian economic woes limit gains. So these are the global updates. Now we'll move on to Indian market update. So yesterday's trading session, market remained negative throughout. Nifty opened almost with 200 points gap down, and finally it recovered and closed at minus 7.40 points, which is minus 0.03%. So for today, the expected resistance is at 24,500 level, followed by 24,600. On the downside, we can expect it to take support at 24,200 level, followed by 24,120 or 100 level. Option chain data suggests the support is at 24,000, strong support right now, and the resistance is at 24,500. But right now we are facing intermittent resistance at 24,400. Even if it breaks, probably we'll still get a bounce back from 24,500. The Bank Nifty also opened with almost 400 points gap down, and then made slight recovery towards the end of the day, and finally it closed at minus 428.25 points, which is minus 0.83%. So for today, resistance would be at 51,348 or 350 level, followed by 51,874 or 900 level. On the downside, we can expect a support at 50,200 level, followed by 49,680 or 50,000 level. So for Bank Nifty, support is at currently there is no proper support, which is trading at 51,000 level. So that is what the support lies, but the new support is building at 50,500, and so we will probably see an intermittent rejection from 50,800. But if this level is broken, then probably there's a possibility for Bank Nifty to slide towards 50,500 level. As far as resistance is concerned, 51,000 still holds to be a strong resistance for Bank Nifty. Mid cap was down yesterday in the beginning of the trading session, but then towards the end of the day it recovered, finally closed at 131 points, which is minus 2.3%. So for mid cap index, today resistance is at 57,160 level, followed by 57,400 level. On the downside, we can expect it to take a support at 55,940 or 56,000 level, followed by 55,667. Small cap Nifty also closed negative, and closed with 50.45 points negative, which is minus 0.27%. So for today, resistance is at 18,843, followed by 18,977. On the downside, we can expect a support at 18,500, followed by 18,262 or 300 level. Now let's look at the sectoral data. So sectoral data, we can see that slowly it is changing. The footprints are changing, and we saw the shipbuilding was the top performer, shipbuilding and aviation, for quite some time, but now that's no longer the case. So now agriculture, FMCG and telecom are the top three performers, but again, we are seeing some kind of profit booking also across the sectors. And aviation is also one of the top performers. So other emerging sectors are information technology, alcohol, healthcare, industrial gases and fuels, infrastructure. Shipbuilding is down here, but I think it's better to avoid now because it has given already rallied quite a bit. So a high chance of profit booking. Construction materials is another good one. Logistics, abrasives, consumer durables, automobile ancillaries, paper, power, textile, media and entertainment, finance, chemicals, capital goods, gas transmission, and electricals. So these are the sectors where still profit booking is continuing. Of course, there is a fear that market is at all-time high even after it's a negative budget per se. Market has still not corrected, so we can still continue to see some profit booking, but some of these sectors could be a buy on dips opportunity, but it is recommended that we stay light for some time. Still, we see some good sectoral rotation. As of now, we are seeing, profit booking across sectors, except for few ones. So I think it is recommended to stay a little light at this point. Now let us look at the deliveries. So deliveries, we have seen good deliveries in industrial gases and fuels yesterday. Alcohol is one sector which is getting good traction. Trading and textile, consumer durables, agriculture, then ratings, crude oil, and healthcare. So these are the few sectors which are seeing good positive delivery. So maybe people interested for short-term outcome can concentrate on these sectors. Basket recommendation for the week. So we are continuing with FMCG stock basket, expected returns 10%, and Best Pharma stock basket, expected returns at 10%. So as far as performances are concerned, the calls given on 1st July, the baskets was large cap, auto and private. Large cap is at 1.26% positive. Auto is recovered from negative. Now it is 0.67%. Private bank continues to slide. It is right now at minus 3.92%. For the calls given on 15th, FMCG is at 2.42% and pharma is at positive 1.13%.